The Reserve Bank raised the cash rate for the first time in more than 2 years yesterday and implied that more rate increases could happen later in the year. Money markets believe Australia will receive at least one more, potentially two more rate hikes. So let's bring in here Micaela Fuchila, the Chief Economist at Jarden. Micaela, great to see you. 3 months ago, the market was expecting rates to fall this year. Now they're on the way back up. What's gone wrong for the RBA and our economy?
Yes, I wouldn't say wrong. I think the recovery was perhaps a little bit stronger than the RBA was estimating at the start of the year. I would say there were also a few temporary factors boosting both growth and inflation into the second half of the year. And with inflation uncomfortably high and above the RBA's target, they were forced to respond. The inflation story is interesting because it's not really been driven by those interest rate exposed sectors. It was more the response of the removal of some government rebates and things like that that boosted inflation optically, but it was something quite uncomfortable and they couldn't wait.
Yes, so the RBA's lifted rates. Obviously, how much impact, though, does one rate rise have on our economy? 25 basis points. Is it going to result in inflation coming back down to target quickly enough?
In the eyes of the RBA, the governor has already told us that she thinks one move is material when you are above target. In our view, on growth is really limited. We expect it to drag on consumption by 0.2 across 12 months. So it's not really a big number, but it does send a message that the bank will respond to high inflation, and that has already impacted confidence. We have seen consumer confidence declining. We have seen some businesses also reporting less confidence, and the housing sector showing some signs that things might have peaked in terms of price growth as well. So it might not be as significant in terms of dollar terms, but it's definitely dragging on confidence.
All right, so it's a strong signal then. Many economists believe rates do need to go higher, though. I mean, what are you expecting the Reserve Bank to do in regards to monetary policy over the rest of this year?
Look, I'm not one of those economists. I think one rate cut send the signal. We also have macroprudential policy coming through to lower the housing sector or the heat in the housing sector. The currency is stronger, bond yields are higher. We have a lot of uncertainty internationally as well, geopolitical issues, as you said before. And on top of that, we have a consumer that went through a strong period of spending, but now the labour market's looking a little bit weaker in our view. So that will, of course, drag on confidence and spending as well. So I don't think there's scope for rates to go up any further this year. But what we do think is if we see persistence on inflation going forward, as we saw over the second half, then the RBA will have to respond again.
And does the government need to do more as well by potentially cutting back on spending initiatives or encouraging more productivity gains?
Yeah, the productivity story is interesting because sectors like constructions normally have low productivity, and this is what the government's been focusing on, increasing the supply of housing. But in saying that, those are long-term measures, and the RBA is looking more at the cycle. In terms of what the government can do, they're actually removing subsidies, which optically they increase inflation at the start, but later on, subsidies, no subsidies is better than subsidies in terms of the output or the outlook for inflation. So boosting productivity growth, supporting perhaps trying to get electricity prices back down in a different way than getting rebates coming in and out will help to understand where inflation is coming from. But some of the inflation that we saw last year on wages growth from the public sector, we think that also has peaked. So it seems a coordinated effort to support the inflation outlook going forward from all levels of government and the RBA.
And what's your expectation for GDP growth for the rest of this year?
Yeah, so we have it hovering around the 2% to increase to 2.4 by year end. That is perhaps above what the RBA thinks is potential growth, but we think the potential growth is higher than that. So we still see a recovery sustain into the year, but perhaps not as driven by the private sector as the RBA is expecting.
Micaela Fuchila, great to have you on the show.
Thank you.